All right, welcome Vetted VA to Shopping for Lenders. My name is Jason Rivera. I'm a San Diego real estate agent, and we'll be learning about what to look for with lenders. I'll turn it over to Glenn to introduce himself.
I'm Glenn Groves. I'm your resident lender. I'm licensed in 7 different states. I'm headquartered in California. I'm excited to talk about how to rake lenders over the coals. When you're shopping for them, what are the questions you should be asking to get them to fess up and get a real answer out of them?
So, why should we shop for lenders, Glenn? Why is that important?
Well, we're not all created equal, right? And most people are going to focus on rates and fees, which are important, but also there is, there's the professional aspect of, are they structuring the loan correctly? Timing, as far as being able to fall within contingency dates, close of escrow timelines, and then communication with the rest of the team, right? Whether that is with the borrowers themselves, other professionals like yourself, Jason, the real estate side, inspectors, the actual lender themselves, if they're a wholesale broker like myself, or an underwriting team, etc. Escrow, title, they kind of need to be talking to everybody throughout the transaction. And if you got a lender that nobody can get a hold of, that can be a massive issue. And I know we're going to talk about this a lot. You gotta have to trust your gut too, right? When you talk to somebody, it's like, hey, does this person sound like they know what they're doing? Like, what's going on here?
I was going to say something that I always talk to clients, and that is that you're building your team, right? Like this is your home buying team, and part of that is finding your lender, your mortgage professional, and also finding your real estate. And essentially, for the next 30 days to 3 months, you're kind of in this relationship where you're sharing all of your financial, essentially secrets, things that you're not publicly telling people, with your lender. And your real estate agent is as well as sharing with them all those things that you're looking for in a home, and your family dynamics and whatnot. And you have to feel very trustworthy with them, and a lot of that comes with that gut instinct. A lot of times, we see on Vetted VA people reaching out and asking questions, which is great, but they're going, should I tell my lender, or should I tell my real estate agent this or that? And we're over here kind of in the background, a little bit of cringing, going, oh yeah, you definitely need to tell them. Like that's
It's like
important. You should have that relationship.
Yeah, you could almost boil, and don't get me wrong, we still want people to ask questions, but a lot of them you could boil down to, well, what did your lender say? Right? Like, how
Exactly.
come you're not asking them this question? You're halfway through the process and you've got this issue. What did your lender say? Because you guys, we're on your team, right? If you tell us something that essentially you're like, well, should we do this? It's like, yeah, maybe we don't tell the lender that. And again, it's not an omission or any sort of fraud piece, but it's just something of, hey, they don't need to see all these other financial accounts if you're not using money from there. Something like that as an example. But otherwise, this is a team sport.
100%. I know you touched a little bit on this, Glenn. So some factors to compare. Everyone is always looking for that interest rate.
Yeah.
Like that's the very first thing that everyone's, always concerned about. But I think while that is important, I would say that the loan terms, the fees, and really this fourth one down here, that customer service and communication should be equally weighted with the interest rates. What are your thoughts on that?
Yeah. Interest rates, I kind of look at it as interest rates are incredibly important, right? Obviously, it's going to be the driving factor for what creates that monthly payment with the principal and interest. The issue is that people are not focusing on then the fee associated with the rate, right? And we see this a lot of times too, you guys, with people looking that once you do get a loan, you're getting mailers, right? 4, 5, 6 months after, hey, we can get you a 5% interest rate. And you're kind of like, I got a 6.5. Like, how is this possible? Like, read the fine print. That rate is probably cherry picked from when rates were really low in September. Okay, just as an example, we're here in December right now. In September, and there's 2.5 points associated with it, right?
I was going to say one of the big things is like what you just said. Is that cherry picking of a rate, and may not necessarily be telling you how much, how many points is that client having to buy to get that low rate, or they're just spouting something off that may not be realistic. I know we're going to touch in it a little bit further down the slide here. Is that too good to be true kind of scenario?
Right.
If you talk to 3 different lenders and one of the lenders or loan officers, quotes something that's kind of out in left field, you really kind of have to question, what is that costing me? Can they actually close that turnaround time? There's, while the average might be 30 days, actually, I think it's 28 days to do a loan. And, I know there's plenty of VA originators and that can do that quite a bit faster, but there's some out there that, is 60, 120 days sometimes to do a loan, which is just crazy.
Yeah, it's not competitive at all. And those lenders are usually set up purely for refinance, right? Where you look at them and you say, wow, they have incredibly low interest rates, but they're really geared for a 60 to 90 day timeline because they're going after people that already own a home. Right. So it just becomes very frustrating with that. And a lot of times those rates are a mirage anyways.
Right. Well, I think that kind of comes back that it's just that turnaround. Like they promise the world and then they don't deliver on anything. And all that does for the client is it leads you down this path of finding your dream home. You get under, escrow or under a contract, and you spend 15 days, you spend money for, your home inspection, that probably pay for the appraisal, only to find out that, hey, this deal was probably dead at the start because of who you decided to choose to go with.
Absolutely.
So some steps to shop for lenders. I'm a big believer that, pick more than one. Don't be afraid to, you might find that you might call the very first one and say, hey, so-and-so sounds like they know what I want. They've talked with me. They sound great. It doesn't hurt. Just like our, the vetted VA saying, trust but verify. You know what? There's no harm in calling 1 or 2 other potential loan officers, lenders, and hearing them out.
Yeah, you might have that awesome feeling right off the bat. It's like, make sure, right?
Yeah.
Just like you were saying too with the interest rates, you talk to 3 lenders, interest rates and fees, and one of them might seem too good to be true. I mean, little plug for brokers. Sometimes it's a broker and you talk to 2 retail lenders and you're like, oh no, that is legit. You should probably go talk to then a couple other brokers or whatever the circumstance is. And again, that's not unique to brokers. It might just be something that they're hyper focused on with that type of loan product where, yeah, it's an awesome deal. Make sure, right? Make sure by talking to a couple other people and getting a couple opinions. And hopefully you're running into some people that if you did really find a diamond in the rough, they're going to be the first ones to tell you where they say, you got quoted what? You should go take that deal. That's a great deal. I can't touch it. So
I want to give my opinion on these 2 discussions / compare, and I'll let Glenn give his and see if they match up or not. My thought process is that I think it's great to go talk to a few professionals, talk to Glenn, talk to whoever, fill them out, have the conversation, have the questions. Don't necessarily jump to do an application right then and there. Talk to them. See if this is the type of person that, if you're talking with Glenn, is this a person that you feel comfortable with, that he's going to meet your communication needs, that he's going to meet your needs to financially guide you to purchasing. Once you've identified, you've kind of talked to a few, identified maybe one or two people that you really want to work with, then I say, then it's worth the time to fill out an application. I know some people out there like to just, pick six different lenders, loan officers, and submit 6 different applications. And then they come back and go, hey, is it going to hurt my credit? And we're like, no, you're okay. You're within the window. But what are your thoughts on that? Should they just jump right to an application, or should they have some conversations first?
Well, the first thing to address with this is, where are they in the process of buying this house? Right. And this is where a lot of people end up kind of hurting themselves. Of they find the house and then they go get pre-approved. In that case, they might have the luxury of going and shopping and talking and scheduling calls and applying with multiple lenders. They might have to take just a snapshot and say, hey, I talked to 3 lenders, I'm going with this one. Or I talked to one, I got to go with them. Rather than getting pre-approved up front, right? Which is huge. Before you think you're going to go out and start looking, get pre-approved, then you can have your pick of the litter, right? So in that case, as a lender looking at it, I'm like, yeah, it's kind of annoying when we get like a full application, then somebody's like, oh, I'm talking to 3 or 4 other lenders. It's kind of like, all right, in this point of my career, I'm kind of like, sure, go talk to some other people. I know I'm going to give far superior customer service, but that's what a lot of vetted VA professionals can do with the knowledge that we have, right? So for a consumer's sake, yes, you should talk to a couple. Don't be afraid to put an application in, though, because you can just say, look, I'll put the application in, but don't pull my credit, right? You can always do that too, which oftentimes if I talk to somebody and they say, well, I have an 807 FICO score and no debt, I'm kind of like, yeah, I don't need to pull your credit right now. Like, why would I pull it? Right, go ahead. Keep talking to whoever you want to talk. Let me know questions that you have, type stuff. So bit of a mixed bag of a answer, but really from the standpoint of, have they backed themselves timing? Uh,
I'm not sure if it's my internet or if it was your internet. There was a little bit of lag on my side.
Oh.
In any case, here's a question for you, and I'll answer afterwards. If a client jumps under contract and with such and such lender, but they're not 100% sure, or they started shopping and they've made an offer, when do you tell them that, like, because really at any point a client can say, I want to change lenders,
Right.
We know that. But how important is it for them to ideally find their lender loan officer before they get under contract? What are your thoughts on that?
I think it's really important from the standpoint of that pre-approval letter that's going out that has that loan officer's information, that company's information. And if it's a good LO who's talked to the listing agent as well, is helping get them over the line, right? So I think it's incredibly important.
Yeah, I was going to say the exact same thing. I mean, I see this, I want to say often, but I've definitely seen it where, I don't know, someone, maybe they're just in a hurry. They jump into the process and realize that, hey, their loan officer is just not communicating at the level that they expected or that they deserve, for that matter. And then they're like, hey, I'm 15 days in and I'm wanting to change my loan officer. And I'm like, well, you can, and there's nothing, but you're going to have to get it, you're going to have to modify the contract and basically show that you're switching your lenders. Like, everyone's going to be informed of this. It's not something that's just kind of done on the backside, at least here in California.
And how complicated was your file?
Yeah. And then, what kind of extension are we looking at? Because likely we're going to probably have to extend timelines, which means the seller's going to have to sign off on those extensions. If the seller is not willing to sign off on extensions, now that puts you, the client, at risk of losing the home and everything you've done. And there's a little bit more details into that, but just really wanted to kind of FYI the community that
that brings it into another point too of like, okay, well, how am I supposed to pick my lender up front if I don't know what their rates are, right? If they can't quote me an accurate rate because we're floating, excuse me. To that point would be as soon as you get in contract, if you're going to make a move, make it then.
Yeah. I know we got a little in detail on this one, more so than I thought. But once you do run your credit and you request an LE, do you want to jump into kind of what we're looking at? I know we ask the community all the time, send us your LE when they're asking, hey, I'm using so and so. Is this a good rate or does this look good?
Right.
I don't. Can we?
Yeah, we've got a comparison here. I want to go over.
Here we go.
All right. Bear with me. I'm losing my voice here. All right. So let's see. Hold on one sec. Okay. This, Barbara, can you remove the banner at the bottom, please? Thank you. Okay, so this is a mock LE, $600,000 purchase. Main reason I want to show you to this, you guys, this bottom line here that says $16,000 cash to close. This is pretty legit. Let me show you exactly where you need to look when you're comparing a lender's loan estimate. Okay. All you're going to go to is box A, top left, and box J. Are there any lender credits? Everything, box B, C, D, E, F, G, and H, you do not have any control over. The lender does not have any control over. These are going to be prepaid items such as how much is your hazard insurance? They're going to collect 12 months. How many days of interest are they collecting? How much of the property taxes? What time of year are they establishing your escrow account? So how many months are being established? And then B and C are going to be all the escrow title fees, right? You really don't have a choice. Yeah, technically it's your choice of who you want to use for escrow and title. That's not how it really works, right? The listing side usually has escrow already open. You're going to get what those fees are, all right? So the point being is that if you're contrasting, comparing lenders, and you're looking at all these different fees, all you need to look at is box A, because that's where there's going to be any origination charges or discount points, okay? And then box J, if there's any associated lender credit. So like in this circumstance, there's an admin fee for $1,014, and there's a lender credit in box J, the lower right-hand corner, for $478. And this is for a 6.25% interest rate. This is just demonstration purposes, okay? And we have a bottom line of 16,000. Now, looking at this same exact scenario, all right, $600,000 purchase, 6.25% interest rate. Look at the cash to close is $11,000. It's over $5,000 less. No points associated. Why? And the escrow title fees, I just left them exactly the same. They're manipulating the numbers by saying, well, maybe there's 1 day of interest. The other one had 15 days of interest. Okay, and I'll go back to what that is here in a second. That's a huge missing piece. This is going to be dictated off of the day you actually close escrow. It's a proration. Okay. Box G, property taxes. What time of year are you closing? What state are you in? Right? This is specific to California. Where it's like, 3 months. You're like, not right now. They need 7 months. Okay, at $625 a month. And they could easily misrepresent this with here's my fees. And so you're looking at this as a consumer saying, well, wait a minute. It's the same interest rate. It's $5,000 less. This must be a better deal. This absolutely must be a better deal. But what you should be focusing on is box A, which again, they're identical, and box J, which is identical, right? So again, this goes back to, it's not just about rate in fees, it's about accuracy and all these other pieces that go into it. And these are some of the biggest things that get missed, where people are going, well, we went with so-and-so because their fees were lower. You go, what fees? There were no fees in box A. This is where you guys, box A is where you see origination points and stuff like that really just racks it up.
So in box G, is that where you would have, and this is, I guess, probably, well, this is, applies to California, but also applies, I think, to others. Do other states have, I'm drawing a blank, the
Escrow
different,
account?
no, difference in taxes, property tax. What is it called? It trumps everyone here in California when their first time buying. They get the proration. They have a name for it though here.
Oh, like the proration for the you're
Property.
buying at the end of December, so you owe the seller or part of the
Well,
installment. That's not going to be in here in this section.
the section, because in California we have Prop 13, where you bought the home and then you're gonna get taxed. You have your normal tax amount, but there's gonna be a difference because like the prior owner bought the home at 500. Your what'd you say?
Supplemental bill.
Supplemental. Yeah.
No, so this is like box G is the establishment of that initial escrow account at the correct amount, right? That in this case, that $625 a month is just 1.25% of $600,000 purchase price. This is all California, all right? The seller's tax bill could be $300 a month. We're not taking that into account here. That's an after the fact. And again, another point though of like, can you call your lender 6 months later, a year later, and go, something's up with my tax bill, and then help you? Or they like, welcome to the call center again. Like, we have no idea what you're talking about. That's your problem. So no, this is just purely the establishment of and showing accurate numbers, So, but people are like, hey, it seems cheaper. You're like, yeah, that there's no tolerance for them just putting the wrong day or the amount of months though. And then you get slammed with a bait and switch, a legal bait and switch. Yeah, because like, oh, sorry, we had the wrong date in there. Yeah, here's $5,000 more. No, I can't. What the hell? You go, oh, turns out that other lender had accurate numbers up front. Too good to be true.
And then ultimately, once you've had the conversation, ran the credit net, between maybe one or two, you're going to choose whoever fits your needs best. Going back to, if you do get to the point where you're having one or two, well, really, if it's two people run credit and actually give you kind of an estimate on numbers, how important is that to be done essentially in the same day versus, if I get it done today and then I call another person a month later or 2 weeks later?
Yeah, I've heard different numbers, whether it's 10 days, 14 days, 30 sometimes, of you can have your credit run by multiple lenders and it won't affect them. Won't affect your score. But all honesty, if 1 or 2 points is going to push you out of qualification, we probably have other issues we need to be looking at.
Yeah.
Personally, I probably wouldn't have more than 3 lenders run my credit if I were shopping, but that's just me.
Well, as you can tell that we've already kind of talked about quite a bit, is the very first question I always want to know is, how do they best communicate? Every lender should know, or every client should be asking, how does the lender communicate? Are they by phone, by text, by email, combination of something of the above? And then you should also be realizing, how do you best communicate with that lender? And do those fit? If a lender's old school and they're, only telephone, I know, I've had some clients where they were older and the idea of internet really wasn't a thing. And,
right.
For some of us younger generational business people, not utilizing the internet can be difficult. What are your thoughts?
Well, I mean, it turns into we're going to need a 30 or 45-day contract, and we're going to need a couple months to finish the pre-approval. But believe me, we've had people like that too.
Yeah.
And you have to find a lender that will help you with that. If you don't want to do it online, then you need enough place to go in and fill out the application with them. A place to go in and drop docs. That's huge.
I was just going to say, then in that case, you might be looking for someone that's actually local versus, someone that might be a couple 100 miles away.
Right.
Another big one is, who's the main contact for my loan? Some of the larger companies, banks and that, you're going to get passed around, kind of a round robin, where you might talk to someone that's taking your loan app, but you may never talk to them again. I know for anyone that's actually gone through the VA loan assumption process or FHA loan assumption process, this is kind of common because they don't really, most of the servicers in that don't really have one person designated to do these assumptions. So you're constantly, going between different people.
That, and it's not in their greatest interest.
Right.
To move over that 2.5% interest rate. They're like, we'll get to you.
What are your thoughts on, why do you think, what are the hours do they work, or what is their availability?
I think it's really important for you to have access to your lender. That doesn't mean you can, call them at 10 o'clock at night or anything, but it certainly means that the lender should pick up the phone on the weekend, I would think.
Yeah, I was going to say, at least in my experience, most of real estate tends to happen in the afternoons, evenings, or for that matter, the weekends. And so having access to your loan professional, lender, loan officer, not that it has to be 24/7, I mean, there should be some respect that you're not calling your loan officer at 10 o'clock at night. But at the same time, if there's questions or if you're trying to write an offer or whatnot, it is important that there's some availability versus maybe more of a traditional where it's only 9 to 5. That may interfere, especially in markets where it's competitive. Right now, I don't think there's a lot of super competitive markets at the moment. Could be completely wrong. Every local market is a little different. But during COVID timeframe, when homes were flying off the market, having access to your lender, within a few hours was super important, because that was the chances of you getting the home or not getting the home, or at least not being competitive in the market for that matter.
Right. Yeah. So I only hesitate on that because I don't want to open up the door for everybody to be like, well, this guy said that I should be able to call you at any time. You're like, we do have lives too,
Yeah.
but
you're not stuck in your office 24/7, Glenn.
22, 7.
We already kind of touched on this. What are, your lender fees? What is realistic, or what have you seen? What is the norm for lender fees?
So like an underwriting fees usually pretty normal. And that's going to run anywhere from $900 to $1,100 in box A. After that, maybe like a $250, sometimes I like junk fee type thing. But when you start seeing all this stuff getting piled on, like, oh, well, we have the underwriting fee, and then we have an admin fee of 0.5% of your loan amount, that's when it starts to get out of control. So actual lender fees, there's admin, there's you can call it a credit report. You have to have one of those. That's going to be called $100 nowadays, which is crazy. And then they're going to have probably $200 worth of assorted fees, like MERS and flood reports on the actual property and whatnot. But once you start seeing crazy stuff show up, you got to get out of there. Unless the interest rate is just too good to pass up without any other fees associated, right? That's why they broke down the loan estimate in the way that they did, of just look at box A. If that thing is piled full of fees and that interest rate isn't bargain basement low compared to what else you're seeing, it's a bad deal. It's just not a good deal,
So if I was a client and I was like, hey, Glenn, what is your experience with VA loans? What would be like, how do I distinguish? Because like, if I don't know anything really about VA
Right.
loans, how do I know that you know something about VA loans?
Ooh, that is actually a good question because there's a lot of BS that could be you could get told. Um, what is a good way to try and distinguish without knowing anything about them? When's the last time you did a VA loan? Because
Yeah.
I've rooted out people like that before. Agents even, right? Where they're talking a big game and we're in contract and I don't really know them from Adam. It's like, well, when's the last time you did the VA? Well, it was a while ago. It's like pull their numbers. You're like, it was 2.5 years ago. Like things have changed, or let me guess, you're rusty, type stuff. Or where was the last VA loan that you did? Something like that. Again, they can give you a BS answer, but
I think a good question that's it's actually not on here might be, have you had a VA loan come in, a VA loan appraisal come in short?
yeah,
Um, and what happened? So maybe if Glenn was like something about Tidewater or reconsideration of value, might be like an immediate like, hey, this guy has at least done
I'm
a
gonna trigger
VA
hair.
loan,
Yeah,
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 and has had that scenario.
yeah. That's good. Yeah, all you have to remember as a consumer is Tidewater or reconsideration of
Consideration of
value
value.
(ROV). If they mention those, they're like, all right, yeah, like they probably know what they're talking about.
Yeah, just pick some of the keywords out of vetted VA, and then
Yeah,
when you talk to the lender, if they're not saying any of these keywords, then you might want to question it a little bit more. I
absolutely.
think Glenn, you already kind of covered. What cost should I expect when you went over the loan estimate here? Um,
Yeah, and people try and pin that down too of like, well, is it 2% of the purchase price or whatever? And that's going to be very state and regional specific, for those what those numbers are. Like California, safe to say anywhere from 12 to $15,000. That's including taxes, insurance, all that type stuff. But that's still a wide range, you know. And so I say we just don't know though until we have the actual property to know who escrow title is. But have 15 grand ready to go for closing costs and prepaids. And that's assuming no credits either, right?
yeah, that's just pretty much spot on with what I tell people. I'm like, you know, 12 to 20, and if you're kind of in the middle, 15, 16, you're sitting pretty decently.
But you maybe get another state where it's like Colorado, it's like bare bones. There's like barely any closing costs involved. And then I've seen one from Maryland where you're like, oh, there's $10,000 transfer tax. That's the buyer's responsibility. You're like, oh, damn.
Yeah, there's been a couple states I've seen on the East Coast where they were pretty, I mean, surpassing,
Attorney states, yeah.
yeah, surpassing California.
Yeah.
Some red flags to watch out for.
Uh-oh.
My big one is poor communication. If they're not getting back to you on time, if they're hard to get a hold of, especially right up on the beginning. You're trying to just have a conversation with them, trying to meet them, and it's hard to get a hold of them. That you're kind of already, maybe they're busy, maybe they're not a bad person, but maybe they're just busy,
Right.
and if they're busy, your loan may not be at the top of mind. So just realize that communication is huge in this business. I don't think I put the quote in there, but I always say that it's the key to success, and it's also the number one reason why transactions fail. Like it goes both ways, right? It's a double-edged sword.
Absolutely.
What would we look for pushy sales tactics? What would that look like? Or what's
Biggest
Greg
thing with
looking for?
lenders is going to be push to run credit right this second, which a lot of lenders do that, but then kind of a scare tactic of like, well, you already applied with me. You can't really apply with anybody else and it'll hurt your credit, right? Let me think of some other pushy stuff. It's just not my nature, so it's hard to think of the other way to do it. Would be, I mean, essentially not taking the hint, right? If they're hounding somebody to apply or something or schedule a call, and they're just not replying. It's kind of like
Right.
take the hint type thing. Otherwise, I mean, this all kind of goes into the vague or incomplete loan estimates, and it kind of all wrapped up is oh, no, don't worry about that. Trust me on this. Like that's not the real numbers type stuff, which again, all lenders, anybody watching this, we've all been backed into that corner unintentionally with some disclosures going out that we can't control and having to say, no, trust me, these numbers are going to come down. But getting the like used car salesman vibe off of that, people can sense that stuff, right? Trust your gut. When
I've
you're
seen
like
some
off here.
I was gonna say I've seen some come through in vetted VA where it was like verbal only, and they were
Oh,
trying
yeah.
to, where we've told them go back, ask for their LE, and they're like, well, they said that they can't get an LE yet, or it's not available, but
Which that is, to
they
shed a
texted
little
us.
light on that. Yeah, like especially being a third party broker. I mean, I can't issue really an LE without uploading you to a lender, getting you registered with them, and essentially triggering other disclosures having to go out with it just for you to look at an LE. So a lot of brokers in my spot will either send a mock LE, and if they're good about it, they'll be putting like a big, test or preview or something over the thing. But getting an actual LE requires essentially you applying for the loan type thing. So it's, do you have an LE or an equivalent of that LE that then I can like kind of hold you to those numbers type stuff. Right. So I didn't want people to think like, oh, if I can't get an LE, it's BS. You're like,
Yeah.
kind of, but I mean, again, use your intuition of looking at it, be like, this thing's way off, and it's not an LE. It's like, what's the LE gonna say? And you just don't want to get into that position where 5 days later, basically your window has shut for being able to shop for a lender. They go, here's the actual LE, and you go, crap, it's totally different than what you go, yep, it was too good. So take it with a grain of salt, with do you have an LE to issue or not? And one other thing I wanted to touch on before we kept moving, and while I have my voice, is those LEs we were looking at and everything. The key with those two is they and with all LEs, you guys, when you're looking at them, in the upper right hand corner of the first page, it says if it's locked or not. Okay. Sometimes you may get something from a lender in that same scenario and it's 5.5%. And Glenn said to look at box A and there's no fees. Is it locked? Because if it's not locked, they could technically issue something that doesn't show what the actual cost would be until you lock that LE. So is the loan locked? Right? Because you could manipulate numbers. I could show you that same LE, be totally within my legal rights and everything, and probably have it down to $8,000, of fees, and show you a 5-something% interest rate. And I would have no recourse if that thing ended up being in the mid to low sixes, piled up to 20 grand. People are like, this isn't fair. You go, I agree. And those people are slowly getting weeded out of this business, but it's unfortunately it's how people know how to legally bait and switch.
I was gonna say, well, let's take a moment and pause on the red flags. First, just remember for the community that you can send your loan estimates, and you can still continue to ask any of the moderators that as you go out and shop for different loan officers, that you can send that information privately to any of the moderators and have them review it with you, just to see if it is a good deal, because there is a lot of information. I mean, Glenn's here dropping some good information. I didn't even think about the whole lock unlock aspect. Second, we did have a question come in for those that are 100% disabled. Is there a difference in the loan process?
Not really. The only main difference is going to be that depending on the state that you're applying in, You can sometimes use, if there's a tax advantage with the property taxes, you can sometimes use that as part of the qualification. Most states are still in the format of, we have to set up and qualify you on what the taxes are, assuming you are not 100% disabled, and then you'll get that benefit after the fact. Now, VA loans are incredibly flexible. So but I mean, we could be talking about a state where they completely wipe out the property taxes, right? That could be anywhere from, let's call it $400 to $1,000 a month. That could make a big difference for qualification. So that's really going to be the only other thing. Once you're above 10% disabled, I mean, your certificate of eligibility is going to come in that you're exempt. There's going to be no funding fee involved, etc. But otherwise, no, it's just in your income, your disability income will be on that certificate of eligibility.
It's a great question. It's something I've seen quite often, actually.
Yeah.
Going back to the red flags, high fees without clear explanations. I think that's the key to that, is the high fees, but without that clear explanation. Because maybe you talked to one lender and said, "Hey, I don't have any closing costs," and they comped in, a lender credit of some sort where the cost of that was higher, versus maybe you talk to, lender B, and it looks lower, but you're not getting that closing cost,
or they're not accurate, like we looked at earlier. So
exactly, making sure that you're comparing apples to apples.
Fees. Yeah, you'll see high fees like that, like a builder type thing, but then they'll offset it with some sort of credit. I always like to use the analogy of, like, builders are like when you go shopping at like Ross or TJ Maxx or something. You're like, "Oh, these basketball shorts, what a great deal! These are normally $100. I got them for $9. What a fantastic deal!" They'll like build up all these fees, and then they'll pay themselves with like a credit. You're like, what are you doing here? What's happening with that stuff? So again, that would show up in that box A, and then the associated lender credit in box J.
I think finally, and we kind of talked about this a little bit earlier, was that too good to be true deals. When you've talked to a few different professionals and get a feel to who they are in that, and maybe you got to the point where you've done the loan app and you've gotten some numbers produced, that's really where you can kind of start to see that, hey, if one person's out in left field and you're kind of like, man, I really don't want to go with them because they're like, they're a whole 1% below everyone else, and everything's looking really good, you really have to start to kind of question, is this a too good to be true deal? I feel like a lot of those mailers that we get, those junk mailers that
totally,
that everyone that has a VA loan gets like on a regular basis.
Have your credit pulled for something. Like, I had to get my credit pulled like 3 times a year for research with lenders and stuff. And of course, I have a VA loan myself. God, I get blown up with mailers and phone calls. And did you know that you could access this equity? I'm like, look, dude, I got a quarter, 2 1/4. Like, get out of here. But yeah, so most all of that stuff, they're fishing, right? They're trying to get you to do like a cash out refi or something in those circumstances. Or it's just, again, like I said earlier, it's a cherry picked rate from a certain date that they disclose, but it's in like tiny writing in all that verbiage. And there's so many hooks, like, well, you gotta have a 60% loan to value and 800 FICO score, and you're going to pay 2 points, all this stuff where you're like, just check one of the boxes. You don't qualify for it, but they got you on the phone with your little call and give us this number, this code. You're like, oh, so
remember, have you seen the Santa Claus?
Yeah.
And where he picks up the business card and then like zooms in. It's like the claws,
it's like around the edge. It's all the little fine print.
You got to watch out for that small fine print.
Yeah.
Well, apparently we knew these slides a little too much because we've covered a lot of this. Trust your instincts, right? Your gut feeling. If you're not getting that feeling that you could, tell whoever you're working with about all your debts,
they're gonna find it.
I had a client that had a side credit card from his wife, and I always think of that. Like, you need to be able to reveal all that. Like, your lender's going to find that when they pull your
Yeah.
credit. Verify your. Reviews are good. I kind of say reviews are kind of like taken with a grain of salt, right? Like, people that inherently have bad situations or run into problems, they're more likely to leave a review than people that have had success. On the flip side, though, if you see tons of bad reviews and multiple sites, then and then you're also experiencing that bad communication or that poor communication. Well, what is your gut telling you?
I do think reviews are really good, though, too. Like, when there's a big enough body of work,
Right.
to pull from, where whether it's Google reviews, Zillow reviews, Yelp reviews, whatever. Personally, I don't really trust the ones where it's like a proprietary site, where it's like, oh, it's lenderreview.com or something. You're like, what is this?
I feel the same way with, like, I put them on my website, but I always feel like looking at someone's, like, the ones that they post on the website, like, nah, I need to Google them. Like, I want to see what does actually Google or Yelp say.
What do they not have so much control to curate over?
Exactly.
Which I don't even mean on the website. I mean, like, there's so many different third-party apps where they're like, oh, well, I can automatically reach out to your clients and get a review. You go, yeah, but you're just housing it on your site that nobody goes to your site to look up anything else like restaurants or whatever. It's purely just lender crap, on there. I'm like, I don't trust this, because this could just be totally manufactured. Or something like Google or even Yelp, which I've had a love-hate relationship with Yelp in the past. Like, you really can't modify those reviews as the business owner, right? So it's kind of a exposure of what you're actually doing in business. And personally, I've gotten a ton of business off of people finding me on Google, because again, it's that social validation, right? They're like, oh, there's no way you had 250 friends go on and give you a 5-star review. Like, these are actually real people. And you go, yeah, I know, but thanks. Like, thanks for verifying that for me. They're like, oh, it sounds like you guys take good care of people. It's like, yeah, well, yeah. Wait, would you leave me a review? Thanks so much. Yeah, but because we all do it, right? For all sorts of stuff, right? This hotel, this restaurant, this
100%.
dealership, it's lenders. I hate to say it, but we're kind of a commodity.
Yeah,
we are a commodity. Let's be honest, right? And it's like, so you gotta work with somebody that's actually gonna give you honest feedback and look up the reviews.
I think that's the key, is that honesty. If you feel like who you're talking to is giving you the down low, honest truth, not trying to candy coat it, and just like, maybe your credit isn't the best, and the lender's willing to say, you know what, your credit isn't the best. Here's what we can do. And this is the key, though. They give you the but here's what we can do to fix it. These are your options. But willing to have that honest conversation.
Yeah.
And not candy coat stuff and try to sell you that, I don't know. Ensure transparency and communication. Kind of goes back to that honesty. And then choose a lender who supports your goals. I think that's huge.
I think that's underplayed, honestly. And again, that goes back to the pushy sales tactics, right? Like, well, somebody really wants or needs 3-bed, 2-bath or something. You could always upgrade it in the future. Here's a 2-bed, 1-bath. Like, yeah, this works. Like, and they're pushing you towards that. Unless it's all you can afford, it's kind of like are they really supporting what your goals are? Of doing that. Again, it's a team sport, right? We all have to be pulling the same direction.
Well, I think for the lender that's asking the client or the person that's coming to them, what are your goals? Actually understanding what are they trying to do, instead of just saying, here's a loan. Like, hey, Glenn, I want a VA loan. And Glenn's just like, here's your VA loan. Like, you're approved to X amount. versus what are you actually trying to do? What are your goals? What are you trying to buy?
What's
Where are
your
you at in life?
what do you want the monthly payment to be?
Yeah,
Right, it's one
exactly.
of the major things because then you work all the math backwards, right,
Right.
from that standpoint. But yeah, and keep coming back to that as well, right? Again, supporting that goal of, hey, you want a $3,000 or $4,000 monthly payment, but you got that realtor off Zillow or whatever to go show you that property that's 900,000. They're like, well, I really want to do this. You're like, okay, and let's say they could qualify for that. Let's just say it's very much okay, here's that house, and here's what your original goal was. Just just saying, like you had mentioned at the beginning, you're the emotional piece, I'm the logic piece. Hey, here's logically what you should do.
Yeah.
Just because you can qualify for something doesn't mean you should necessarily do it. And you need to have that team member there to just be, well, let's talk about it.
I love to hit it with the goal aspect always because as a buyer, you're really thinking, I'm just trying to get a house. Like, if you're active duty, you
Yeah.
just PCS in an area, you're like, I want to buy a house. Like, this is the time we just got married, whatever the case may be. I'm going to buy a house. But you're not necessarily thinking about like, especially if you're active duty, hey, I'm going to PCS and again, potentially in the next 3-4 years, maybe you're a E6 going to make E7. I know for the Navy, when that happens, they tend to PCS
Yeah.
you early to different command. So these are things that, both sides, both your real estate agent and your lender are going to have these conversations to kind of figure out where you're at in life and make sure this is the right time for you to purchase.
Yeah.
Because
Well, and
it's one thing to
that
get
goes into
pre-approved, but it doesn't.
is like in that first perfect example. And I know we've dealt with this too, right? Is if you're PCSing in the future, do you plan on keeping this as a rental? Do you
Yeah.
plan on liquidating this property when you move? What about entitlement? What about if there's an opportunity to refinance? Do you do that as a primary now or as an investment? You can have these conversations with a really good lender and real estate agent about really doing the chess moves, right? Because so many people are like, I heard I can build wealth through real estate. And Jason, you and I both know that the answer to that is, yeah, and you know what the secret is? Usually you buy a primary residence, you live there for at least a year or two, and then you move to another one. It's not buying investment properties. And don't get me wrong, you can totally do that. But the easy way and the way most people do it, primary, leapfrog to a new primary, and you keep that turning the old one into an investment. If you're upfront with your lender about that plan, it's going to change the makeup of what you're trying to do because you need to look out for how much entitlement are you going to have left when you go to the next one. Should you put a down payment on this one to maintain some entitlement? Should you use a VA loan on this one? Type scenarios.
100%.
So, yeah, you want to be playing chess, and the more information you can give your lender, the more they can help you make those decisions.
I'd say that goes, yeah, both sides. I mean, having those conversations, that's why it's so important to voice your goals, your plans, what you're looking for, so that your lender, your real estate agent who do this all the time can say, hey, that sounds like a great plan, but have you thought about this? Did you calculate for this? Maybe, if you're thinking about turning some of your real estate into investments, becoming a landlord in that, sometimes primary homes, as far as like what I want in a home, doesn't necessarily always equate to a great rental. Um,
Right.
Maybe not the case in California, but maybe on the East Coast where homes there are more buyers that can afford a 3,000 square foot home and with like 5 bedrooms, but maybe a 5 bedroom may not be the best rental versus like a 2 to 3 bedroom in that area and
Right.
stuff like that. There's just a lot of things that you can, a lot of
Yeah.
conversations that can be had. And so it's important that you're willing to have those conversations with your professionals.
Absolutely.
You want to wrap up the conclusion here?
Yeah. So, uh, we've kind of hit on a lot of these, right? Like, those informed decisions, right? Exactly what we're talking about right now, right? What are those end goals? Finding a lender that is going to meet all of those different things can be difficult, right? With closing costs, rates, structure, hitting end goals, things like that, but they are out there, right? Check your vetted VA map, right? There's our plug. um, the experience, the VA loan experience, if you find an inexperienced lender with a VA loan, you can find yourself in hot water very quickly. Okay. These aren't super complicated loans, but there's little nuances with them that can really trip up lenders and subsequently derail an entire process. I'm sure you'll still get the loan done, but it'll be like a root canal the whole time, like not knowing to get a pest report on the West Coast. Could you imagine that, Jason? It's like, no, you know better. You would be steering the company. Hey, we got a pest report. They're like, okay, thanks. You're like, do you want this? Like, you're going to need this for the loan. They're like, what do you mean?
Verifying that the condo is actually VA approved.
Yeah, those type little things where, again, it's still an ability to repay loan, right? It still comes down to debt to income ratios and whatnot. But having that VA loan expert can really open up some ease of transaction as well as other doors for how much you can actually qualify for.
I think especially go ahead. Sorry.
No, go ahead. Good.
I was gonna say, I think it especially comes into play is when the loans kind of deviate from just being cookie cutter, right? Like when you have a cookie cutter loan and it's super simple, you as a client have an 800 plus credit score and you have cash on hand and everything's just very streamlined. Can that inexperienced, lender close a VA loan? Most likely.
Sure.
They're probably gonna do it, and it may not be that bad. However, it's when there's any slight deviations, when there's, like it's a condo and it's not VA approved or something like that, that's where that experience really, really comes into play. That, ROVs, Tidewater, having that communication, knowing who to talk to, just the expertise in the field of VA loans, knowing that you can reach out to the RLC and that you have those kind of two-way communications.
Absolutely. And I mean, every loan, to be totally frank, is like 70% the same. It's that 30% that's going to bite you. And the layers just get added on with it being a VA loan. Again, I think it's the best loan out there. But yeah, unless you are about as cookie cutter as it can get, and then watch it be something with the property.
Yeah.
Right. Where you're like, oh yeah, you were right. You were great as a borrower. Property and what to do with it. I don't know VA. So ask questions. Be patient. I like to put that in there, but be patient and ask questions. Because you'll get answers, So that's awesome.
Barb says we have no other questions, so I think we can wrap it up tonight.
Awesome.
All right.
This has been good. That was a quick hour.
Barb, you can